Joining our closing bell exchange today, Tom Lydon. He's the CEO and editor of ETFtrends.com. Shannon Saccocia is the CIO of Boston Private Wealth. And Rick Santelli, our old friend, of course, at the CME in Chicago. Rick, let me start with you. Despite all the Sturm and Drang about Turkey and China as well, we're essentially flat for the week. What is this telling us about the markets?
Well, you've nailed it. Not only are we flat for the week with respect to equities, we're darn close to flat. We sold off a little bit, pushing rates up towards unchanged in the Treasury complex as well. The one man odd out here is the dollar index. Dollar index down over ½ cent. And that actually answers your question, Bob. Listen, the issues, especially some of the political issues out there, aren't going to go away overnight. What we're seeing is that the impact of emerging markets, Turkey, all the trade issues, at least irrespective of what the president's dealing with directly with China, for example, or NAFTA related, their influence on the market is waning. That doesn't mean the issues are going away, but many of us at CNBC monitor the issues, but it's the effect in the marketplace. And I think the dollar on a late session Friday, giving up some of the ground that it gained because of many of those issues, is a real positive sign.
We may be flat and resilient to the Turkey news, Shannon, but not everything is up this week. In fact, if you look across the market, energy, materials, consumer discretionary, and technology are all ending the week lower in terms of sectors within the overall market. So that tells a story as well about investors getting defensive.
Yeah, and I think that's, we've seen this intermittently over the last several weeks. I think a couple of things are happening. One, you're seeing technology. We're seeing finally a little bit of profit taking in technology. We saw it from the hedge funds in the second quarter based on reports, and now we're seeing it maybe in the retail space and in the traditional institutional space. I also think that, if you think about this sort of transition to a more defensive posture. I think if you look at where we are in the economy, I mean, you saw consumer confidence today, although the University of Michigan was a little bit of an outlier versus the other consumer confidence surveys. I think that people feel that we may be entering those kind of later innings. And frankly, there's some value in some of these quote unquote value sectors. And so I think people are actually looking at those and saying, well, it doesn't cost us too much to get defensive. Maybe it's time to add some of those positions to the portfolio.
And Tom, Q3 and Q4 guidance for the company still seem fairly strong. We're looking at a potential 26% gain for third quarter earnings, somewhat in the 20s for the fourth quarter as well. The numbers aren't coming down. And to me, that's the main reason we continue to outperform the rest of the world.
Bob, you're absolutely right. And speaking of the rest of the world, we saw a huge move just in the last hour since Dominic Chu mentioned that trade talks were improving between the U.S. and China, and the fact that Xi and Trump might get together in November. About a 2% move in emerging markets and almost a 3% move in China-related ETFs. Now, I know you're watching ETFs all the time, $160 billion in new money in ETFs so far this year, but the IEMG has $10 billion year to date, $2 billion just in the last month, and it's had a pretty good move for getting emerging market representation for only 14 basis points. Listen, if these talks improve, this might be the link that everyone's looking for as far as valuations getting better, markets getting better overseas, especially emerging markets in China.